If Nifty was a Bollywood actor, who would it be and why?
Probably Shah Rukh Khan. I'll tell you why. Because he's had his bad patches, but for the large part, it's delivered. I think portfolio should be 80% dal chawal. Dal chawal to me is funds that stand the test of time. They can be flexi cap funds. They can be index funds that are broad market indices, like a large and mid cap index fund. They're a broad market fund. They're things that are not cyclical. 80% if you do this now, you'll be fine. 20% is Ranbir Kapoor says Hakka noodle biryani you are allowed to eat. That too, even I allow my son French fries once a week.
Thank you for coming here, Ms. Radhika.
Thank you.
You've been an inspiration to.
Please don't make me feel old. Just call me Radhika.
It's ingrained in me.
As it is, I see so many young girls and I feel very old. So please don't call me ma'am or anything that doesn't make me feel like 10 years younger.
But it's not about the age, it's the inspiration that you...
Tabhi bhai.
Okay. Times are really challenging right now. The Nifty has corrected by 10% in last 6 months, but on portfolio level, people are just struggling. The portfolios have gone down by 15-20%. 3 recommendations by you in such challenging times.
Am I supposed to be honest?
Yeah.
One, switch off the news. It really creates a lot of fear among investors. You know, the reality is when most of us invest, we invest for goals. We invest for 3 years, 5 years, and I believe women are incredibly goal oriented. And all of this just makes us incredibly short term. In fact, I mean, you guys run India's largest platform, but we have a website where we actually see on down market days a spike in the number of customers between 2 o'clock and 3 o'clock. And you would think these people are here to purchase. We actually went and saw most of them are there to check if there's an NAV update. The NAV only updates once at the end of the day. So this constant urge to check the news, to do something, I think is something that I would guide against. The second thing is that it is natural to feel anxious if you are hearing the news, if you are hearing all of that. But the anxiety doesn't mean you need to take any kind of action. So a lot of people, if they're experiencing this fall, they come to me and they say, Ab kya kare? Ab kya kare? And my answer is, you know, you don't even have to buy more. You don't have to increase your SIP. You don't have to buy more equities. You can just do nothing. And the third is, I think once times get healthier, what corrections do teach you if you are thoda sa first time investor is what your actual risk appetite is. See, because in a good market, everybody's risk appetite is, you know, amazing. But I think using this time to just think through what is happening, how risk actually plays out without taking action, and then maybe when things are calmer, readjusting those sales.
So basically, अपना portfolio भी मत देखो थोड़े time के लिए.
Go do something else.
A lot have been said about mid caps and small caps being overvalued right now. What steps should one take during this time?
Okay, so on mid caps and small caps, they were not cheap 6 months ago. I think that's well understood. The small cap index was at 30, the mid cap index was at 40 times earnings. None of this is cheap. Today the small cap index is at 22 odd times earnings. Mid cap index is probably at 30. So are they cheap now? They're not cheap, but they are 20-30% cheaper than they have been before. If you are an investor who wants to take a bite, this is a better time than it was 6 months ago. My general investing theme for this year, however, and for the last year also, has been something called the middle path. And मुझे क्या लगता है that investors do a lot of swinging. Either they're very heavy on mid cap and small cap, or they move entirely to large cap.
Correct.
And my advice is be in the middle path. See, because you're trying to again build a portfolio for 5 to 10 years. And what do you want? You want to capture the growth in the Indian economy. Ultimately, all of this that we are doing is contingent on the economy doing well. If the Indian economy doesn't do well, all bets are off, right? And if you want to do that, you want to have a portfolio that has companies that represent the Indian economy widely. That has to be a blend of large, mid and small. Now, if you build a portfolio of only large caps, you will have only 3 sectors in your portfolio: IT, bank and energy. You think healthcare is a meaningful space? The largest diagnostics company is a small cap. You think consumer discretionary is a big space? Most consumer discretionary companies who are market leaders are mid and small cap. I represent an asset management company. I think we are a decent sector. That's why I'm spending my career here. The largest listed asset management company is a mid cap. So I think having a portfolio that is middle path works very well, multi cap, flexi cap in nature, rather than swinging to extremes. That's my advice. If you have SIPs, and I know this question has been asked a lot and debated a lot, please do not shut them down at this time. There's a lot of bad news that goes around in the market, and all I can say, and this is my favorite stat, I looked at the minimum 10-year return on an SIP in our own mid-cap fund, little mid-cap fund. It was 8%. Now you say 8% is not a great number, it was a minimum return, guys. Even post-tax, that's not a bad number. The average was much higher. We're women, right? We're great at hunting for bargains. We like things that are cheap. Suddenly your mutual fund units are available cheap as an SIP investor, and you say, no, I don't want them. You should want exactly the opposite. So don't shut down those mid and small cap SIPs.
What do you think should be ideal asset allocation for people in their late 20s or early 30s, people my age?
Asset allocation should really be a function of circumstances. Now, the greatest asset allocation, or the greatest investment mistake I have personally made is as a 25-year-old by over-investing into equities, because me and my husband are both in the equity business. And so when this kind of market happens, our world is screwed, right? Because we get paid in stock options, those half, we run funds, those half, our revenue halves, our bonuses halves, and it doesn't only happen for me, it happens for him too. So me and my husband are like a 5x levered bet on the Nifty. And so we've actually realized that we have to be a lot more conservative with our investments, which is why I'm hesitant to answer this. Obviously, if you're in your 20s or 30s, logic says you should be more equity biased. So ideally, you should be 60 to 70% equity biased if you don't have unique circumstances. While doing that, please make sure you still have a contingency fund, because no matter how old you are, you need to have contingency money.
Let's go to mutual funds. How many mutual funds should one have in their portfolio, and what kind of, just a ballpark thing, not the exact number, of course.
So I meet all kinds of investors, and I saw someone who was doing a 30,000 rupee SIP with 35 mutual funds. 35
over diversification.
That is like owning the whole stock market. I mean, you might as well make a self-index. Okay. So the real answer for most people is about 8 to 10. Now, how do you figure out those 8 to 10? I love food analogies, so you're going to hear a lot of food analogies from me. So I always think कि restaurants भी बहुत सारे होते हैं. I don't eat everything that is out there in the world. I have 3-4 core categories of things I eat. Like I eat Indian food, I eat South Indian food. Pick 3-4 core categories of mutual fund. It could be flexi cap, it could be mid cap, it could be 1 or 2 debt funds, it could be 1 or 2 international. Pick 2 funds from different AMCs in each of those categories. That will get you to a portfolio of 8 to 10. And diversification is not holding multiple funds. It is holding things that will do well at different points of time. It is holding products of different AMCs. So even though I would love for all of you to only be invested in my AMC, it's not diversification. If you're holding a mid cap, a flexi cap, a small cap, and a large cap fund of the same AMC, ladies, you are not diversified. So multiple AMCs, multiple assets, like holding India and China together, that's diversified, because China has done really well in the last year, India has not done well. So think about diversification. I always say that when we grew up, our mothers fed us dal chawal, dal roti, whatever part of the country you're from, and we were pretty happy eating this stuff, right? Then of course, as we get older in life, we are like, Mom, your food is too boring, like my son is telling me, and we want to go eat avocado toast and sushi, etc. All this stuff happens, right? And then we get indigestion, like I did 4 or 5 days ago by going to a theme park, and the doctor says go back to eating khichdi. So I think portfolio should be 80% dal chawal. Dal chawal to me is funds that stand the test of time. They are all weather funds. They can be flexi cap funds. They can be index funds that are broad market indices, like a large and mid cap index fund. They are broad market funds. They're things that are not cyclical. 80% if you do this now, you'll be fine. 20% is Ranbir Kapoor says Hakka noodle biryani you are allowed to eat. That too, even I allow my son French fries once a week.
Moving to more conservative asset class, which is gold, I think that has increased in last 6 months by 18% or so, and I
Yeah.
think women love gold. My mother
Women
has
love
been
gold.
asking me
Yeah.
to put my money in gold since the time I started earning, and
Yeah.
now I think मैं बोलती थी नहीं मम्मी गोल्ड में क्या रिटर्न्स होते, but now she's like I told you, right?
Yeah. There's so many memes going around about how the housewife is smarter than the average nifty investor, etc., etc.
So do you think the trend will continue?
Look, I think gold has done very well in rupee terms. I think it is a sensible part of the asset allocation. But structurally, if you want real wealth creation, and I may be proven wrong, I think Indian equities are the place where you will structurally create wealth. Now, gold has had its own dynamics over the last 3-4 years that I don't want to spend too much time on, but I think gold can be a part of your asset allocation. So, can gold be 10 to 20% of your allocation? Yes. I would, ladies, separate jewelry and physical gold from investment gold, which is financial gold. I enjoy jewelry too. But I think you should keep it separately. And if you want to think of gold as an investment, there are a lot of financial gold options, index funds, ETFs, etc., that give you all of this without the problems of storage and breaking charges and all of that.
There has been a lot of conundrum about should one rent out an apartment and put the rest of the money in SIP or just buy an apartment. What do you think one should rent, or one should perhaps take EMIs to buy a house?
I want to give you the most unbiased answer here. I'm a mutual fund CEO, but I will also tell you an NAV cannot give you happiness beyond a point, right? You can't live in a mutual fund, unfortunately. And if you look at the financial trade-off, and I know lots of people who say financially it makes no sense to buy a house because I will just rent. The rental yield in Bombay, Delhi, any major city is 2-3%. And I will invest the rest of the capital in SIPs, which is what I am also supposed to tell you, and it will be great. Unfortunately, I think just like jewelry is separate from an investment, I think a primary home is a little different from an investment. So I own a home and we spend a reasonable amount of money on the home. And I don't think of it as an investment because a primary home fulfills emotional desires. And those emotional desires are not fulfilled by living in a mutual fund. So that's my take. Secondary home is not primary home. Then you start evaluating it as investment. And then you apply the reality of liquidity and yield, etc. But primary home for me, and this is a biased answer, is an emotional decision. Should you take EMIs? I'm conservative, but I will tell you that for housing, EMIs actually make sense because it's the cheapest form of funding you will get as long as you can handle the monthly interest cost.
I was just mentioning it how women are better investors than men. Do you agree to the same?
I don't know, but I don't know why there is this pressure on, anyway there's so much pressure on us in life as women. Correct. Right? Ghar sambhal lo, office jao, ecosystem sambhalo, then people put these ads, super mom, super wife, super this, super that. I don't know why apne ko itna load lene ka hai. Why do we need to prove that we are better investors than men? Men don't go out and invest to prove that they are better investors than women. I think investment is not a competition, right? You go out and invest so that the money you work very hard to earn also works hard to give you a good lifestyle and to fulfill your dreams. So this is not a competition about being better than men. I would certainly say, however, women in most things have a thoda self-confidence problem. You are not worse investors than men. So my advice is contra. Women have always been phenomenal savers. They have been CFOs of their own home. Our nannies, dadis, mothers, sisters have managed the household budget so brilliantly, taken care of everyone's needs, kept money on the side, and you saw what happened during demonetization. And they don't do it with an Excel spreadsheet. So they have to make the journey from savings to investment, which I'm sure many of them have made. And the only third thing I would say is on this women-men thing, is if you are early in your journey and you feel you've made a mistake, don't be too hard on yourself for the mistake. Investments is like most things in life. You learn how to cycle not by reading a book, but by actually cycling and falling. And you learn how to invest by doing and making mistakes.
But still, some women are not very confident
Yeah.
confident in money management or investments or finance in general. So they hand over the finances to the male counterparts in the family. Agar fir bhi, if they are handing out, what are few things that they should see कि वो तो मतलब हिसाब रखें कि क्या हो रहा है क्या नहीं हो रहा है.
So 2-3 suggestions. One is, like, we have this book at Edelweiss. Create a book where you know all the investments of the house, the liabilities, the investments, the bank accounts, everything. Because I hate to sound morbid, but life is terribly uncertain, and I've now a long career. I've seen too many of these cases. So please, one, document everything. Sometimes, you gave that example of signing the document you didn't know. Women have taken off loans in their name that they didn't even know existed. I've seen in my own family a lady whose husband passed away and she had no idea of all the investments and liabilities. And 3-4 months later, she got some crazy credit card scam because she had some credit card, her husband had some credit card that she didn't even know about because it was not documented, and suddenly one fraud happened. So have one documentation. Secondly, if you don't want to actively manage investments, which I still think you should, at least sit down for a quarterly portfolio review. If your partner is doing this themselves, insist that you sit down with them at some frequency and review it. I told my mother to do this many, many years ago, and now she has a conversation with my father. If you have a financial advisor in the picture, then tell that financial advisor that you want to be involved in that quarterly or whatever review process. And the third is, at the minimum, as husband and wife in a partnership, set down financial goals for the family at some frequency together, because goals have to be common. Yeah, they're family. Whether you leave it, even if you leave it to him to choose the mutual fund, at least the goals have to be common.
मेरे घर पे भी नहीं पता है मेरी मम्मी को कि क्या है उनके क्या नहीं है. But I have few rapid fire questions for you.
Okay, do I get a gift?
Do we have a gift for her?
It's like everybody has copied Karan Johar by asking rapid fire questions.
But mine
and
are not
nobody
that
gives
spicy.
the fancy hamper.
But we have a hamper and my questions are not as
Oh, yours
spicy
are
as
not
Karan
spicy.
Johar's.
Okay.
I'm not asking you anything controversial, don't worry.
So this is like tea with twinkle or something.
Perhaps.
Okay, tea with twinkle.
Okay, so one unconventional investment that you've made.
I mean, a lot of my unlisted investments, the Shark Tank India ones and some of the ones after that, are pretty unconventional. When I've made most of them, my husband has told me, you are an idiot and you're going to lose money. And I've not lost money on any of them.
So if you had to describe your investing style in one word, what would it be?
Very simple and very personal.
One financial mistake you've made that you'll never repeat.
This 100 minus age thing when I was 20.
So you followed that really?
I followed that. I was like, I put 100% of my money into equities at the end of 2007. It's pretty bad.
Correct. If Nifty was a Bollywood actor, who would it be and why?
Probably Shah Rukh Khan. He's had his bad I'll tell you why. Because he's had his bad patches, but for the large part, it's delivered.
The king of the industry.
It's a king. I mean, Indian equities are one of the best performing asset classes across the world. So in the long term, it's king, but it's not been a smooth ride.
One personal finance rule you swear by?
I mean, I've talked about a lot of them, but I think keeping it simple, doing less, reviewing less, just doing less actually.
And one advice that you had to give to your 25-year-old self, what would it be?
Even after a finance education, there's a study of personal finance. I wish I had done a lot more of that. I wish I had read up more, tried more, started much smaller. So when I started investing, I invested my entire bonus. I wish I had started smaller, experimented, made mistakes, and then grown.
Thank you, Ms. Radhika, for a lovely session. It was so insightful and I learned so much, and I hope the audience also had great time and learned so much from you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.